Good evening, everyone. I'm Rakhi Gautam from greytHR, the moderator of Parichay webinar series. A warm welcome to all of you on our 108th episode. Thank you so much for joining us. And as I said earlier, very excited to host you all today. Now, today we are going to be decoding the Union Budget 2026. Now, before we get into that, let me quickly take you all through the agenda. The first part will be the discussion with our experts, which will then be followed by an audience Q&A. So there's a dedicated audience Q&A where you can ask your questions, you can put your questions in the Q&A panel, and we will be taking them one by one. Also, the session is currently being recorded, so you can always go back and watch it later. This will also be uploaded on our official YouTube channel under the playlist Parichay, and the same will also be emailed to all of you with the credentials of our speakers who are joining us today. So in case you have any questions, you want to connect with them later, you should be able to do that. Now, I think we have the quorum to start the discussion. So yes, let's get started. Now, I think all of you would agree with me when I say that, Union Budget 2026 might not have delivered headline grabbing announcements, but it definitely brings meaningful shifts in taxation, compliance, and workforce related policies. So, for HR teams, employers, and employees, the challenge is not just understanding the budget, but also interpreting it to bring what actually matters and what changes in day-to-day decisions. Now, today we'll take on the key highlights which happened during the session, impact on taxation, payroll, and compliance, what businesses and HR teams should prepare for, and also practical steps to align with the new policy landscape. And to decode all of that, we are thrilled to be joined by two amazing experts today who will help us unpack all of this mystery and help you with your queries as well. Let me quickly take you all through their profiles. So we have with us here Ruchika Bhagat, Managing Director at Brooks Consulting Private Limited. She's a graduate from the University of Delhi, and she graduated in 1996 and became a member of the Institute of Chartered Accountants of India in 98. She's a strategic advisor in setting up businesses in India for foreign companies and taking care of its compliances. She specializes in business advisory, tax, regulatory, and risk advisory. She's a business professional, of course, with over 24 years of rich experiences helping other businesses grow and be more profitable. She has a strong and genuine passion for business growth and sustainability and has a vast knowledge of working with Indian companies as well as many companies abroad. Thank you so much for joining us, Ruchika. It's a pleasure to host you as always.
Thank you. Thanks for giving me this opportunity and discussing this budget 2026 with you and your viewers.
Thank you so much, Ruchika. Moving on, we have CA Anurag Jain, co-founder and partner of ByTheBook Consulting LLP, who comes with over 15 years of rich experience in tax, social security, and immigration advisory, gained through his tenure with leading Big Four firms. Before co-founding ByTheBook Consulting LLP, Anurag worked with PwC, BMR, KPMG, and Deloitte, bringing a rich and diverse perspective to client service. He has advised large and mid-sized multinational companies on a wide range of matters, including employee secondment arrangements, compensation structuring, equity incentive planning, and has also supported clients in tax and social security litigations as needed. Thank you so much for joining us, Mr. Anurag. Always a pleasure to host you.
Thanks, Rakhi. Always a pleasure to be a part of such webinar organized by greytHR.
Thank you so much. Now that the introductions are done, we know that there's lots more that we'll be discovering today, and I'm sure the audience is also very excited. So let's get started. I'll start off with you, Ruchika, from a very basic question. From a tax and compliance standpoint, what is the most important shift, according to you, that was introduced in this budget 26 for individual taxpayers and employees?
Lucky last year we all budget 2025, the government has focused heavily on individual taxpayers. So they have increased the tax-free income from rupees 12 lakh and 12 lakh 75,000 in case of salary employee. Vis-a-vis, they have also given the tax relief. They have increased it from 25,000 to 60,000. So I think they have already granted such a bumper to all the individuals, especially to the salary class employees. I think this year the main focus was on stability rather than changes. So they were more focused towards the implementation part. They were more focused towards the assessment procedures. So there is an absence of big cuts. To be very frank, there is an absence of this, big cuts. So maybe this is disappointing to some extent to the employees and to the individuals. But yes, the real value lies in the structural reforms that has been introduced this year. So simplifying compliances, rationalizing TDS rules and transparent processes. That was the main focus of the government. That is, they wanted to enhance the overall wealth management rather than income, if we say. So when we talk about the major changes, so first of all, the major changes is TCS. So earlier, if we were sending our kids outside India for the education, and any payment that is made above 10 lakhs, though it would attract TCS of 5%. Now it has been reduced to 2%. First of all, that is the major change. So undoubtedly, it is a big relief for the families. More students, they can consider pursuing outside India in the foreign institutes due to this reduced financial constraint. One thing. Second thing is similarly, if anyone who is going outside India for the medical treatment, again, TCS has been reduced from 5% to 2%. And in case of tour packages, it is a flat 2% TCS rate, whereas earlier it was 5% up to 10 lakh or 20% above 10 lakh. So that is one of the main highlight of this budget. Obviously, it has been the household cash flows and it has reduced the upfront tax burden significantly. Apart from this, there has been a change in motor accidental claims. So earlier, if any person get any compensation under motor accident claim, so that used to be treated as capital receipts and was totally exempt in the hands of recipient. But the interest was taxable. So now from budget this year, that is from 1st April 2026, any interest that is received along with the compensation, that is also exempt. Apart from this, for the small taxpayers specifically, earlier, if they were not having any taxable income or less rate of taxable income as compared to the TDS rate, but TDS rate was supposed to be deducted as per the prescribed rates. So now they can do online filing and they can claim nil or low deduction certificate directly online rather than going through the manual procedures, chasing the department. So obviously it is going to reduce cost as well as it is going to reduce the compliances part also. Apart from this, there is also a benefit for NRIs. So if in case any NRI who wanted to sell any property here in India, earlier they were supposed to get TAN number first for deducting TDS. Now the systems, the procedures are equivalent to resident. So if any NRI want to sell any property in India, their TDS will be deducted on the basis of PAN, not on the basis of TAN. So this is basically these are some of the major points. Or you can say the tax relief that individual is going to get from budget 2026.
Thank you so much for breaking down that for us, Ruchika. It really helps. And, I think there is definitely a lot of relief. It depends on case to case basis, but yes, we could, if not major headline announcements like, salary tax revisions, but at least these reliefs definitely help. So thank you so much for that. Moving on to my next question to you, Anurag. The new income tax coming into effect, which was announced from April 2026, says that it aims to simplify rules and filings, right? Now, what kind of practical changes can we expect, or can employees as well as HR teams expect to, stay compliant and be ready with it?
Yeah, thanks, Rakhi, for your question. So, a couple of thoughts, because in the union budget, there was a specific mention, and we were anticipating that Income Tax Act 2025, which received the presidential assent last year, is something that is going to be now notified and put into effect. I think what they have clarified now is that in a couple of days or couple of weeks, we can expect the draft rules to also be released. by the government of India. And maybe after release of those rules, they might seek some public comments and provide some kind of a time frame between 30 to 45 days. So right now, if we are sitting in the month of February, if we can expect the draft rules in the coming weeks or so, and then once those comments have been factored into, so the draft rules is expected to be notified. So in all probability, what we are seeing is 1st April 2026 is when the new income tax legislation, which is Income Tax Act 2025, is gonna be coming into effect. Now, this is a very, very interesting time, and I'm whenever I'm speaking to my clients, I'm telling them this is challenging times for organizations. This is challenging times for payroll guys, payroll professionals, consultants like us, because there's two major shift which is happening. First is, of course, the labor codes. Labor codes, in all probability, I would say, is going to come into full effect from 1st April 2026. Government have provided a clarification that 21st November 2026, it has been codified, and the 29 central labor legislations have been repealed. But of course, the rules and regulations around the central and the state part is something that will be rolled out. So that is one major change that I'm seeing that many companies are now grappling with. The second is around the Income Tax Act also. So when the draft rules comes into picture, what we can expect is whether those rules will also be simplified to a larger extent, whether the form structure, we can talk about income tax return forms, the income tax various disclosures and the reporting forms, whether that will also undergo a massive change or not. Because if those changes, then anybody who is basically working via automation or basically providing that kind of a solution, they will also have to rapidly or very quickly make those changes as well. From the employer establishment side, I would say change wise, we are not expecting that much, but because of that simplification of the entire thing, my entire payroll logic might need to change, because your section references also undergo change. So right now, if we are talking about tax deduction under section 192, now there will be a cross referencing under different section, which would need to be factored into. So those things is something that organizations will need to consider. Additionally, as Ruchika ma'am highlighted, that we haven't seen much change in relation to the salaried class, and this was expected because last year only they have doled out a good amount of benefits. We also saw good incentives under the GST schemes. So we were not anticipating that salaried class would be getting much more, incentives from the government side as well. But at the same time, what is happening is we were anticipating that what will happen with the old regime, because that is now the biggest anticipation, because government is going through that smooth transitionary process and basically trying to work out a scenario. Because right now what I'm seeing is, as a trend, is almost 70 to 80% of the employees have already started opting for the simplified regime, and so there's a only few segment of employees who are still opting for old regime. So this is something that we are going to be seeing in the coming years to be phased out, done away with. So that is also something that establishments also need to take care of, and that's why the compensation structuring aspect is the foremost thing that I'm seeing that organizations are also focusing on. More to do with the labor codes, less to do with the taxes. But again, the juxtaposition between both the legislation has to be factored into while doing that exercise.
And thank you so much for that, Anurag, and for breaking it down for each of the role, right? You talked about employees, you talked about employers, you talked about CA consultants as well, and how this is going to completely sort of transform, not in a very big way, but in the minute details that go into that. So
Yeah.
thank you so much for that. I'll move on to the next question to you, Ruchika. You did mention about the reduced TCS under LRS and eased disclosure norms for foreign assets, which I think everybody would agree seem targeted at young professionals and global workers. And in a way, we can say that, this is sort of, giving empowerment to all the young professionals which are, going to be there. So, but in terms of how significant these changes are, if you could take us through that, is it like, very big, or these are like little changes that have happened and which might or might not have like a great impact? So, if you could help us with this, Ruchika. If you could please unmute yourself, Ruchika. Right now you're on mute. Yes.
Well, Rakhi, I can say these changes are subtle, but they are very practical, focusing more on cash flow relief, easier compliances, and long-term financial stabilities rather than a short-term giveaway. So these changes strategically they are defined to support global India and to reduce any procedural frictions, those who are working outside India or who are doing cross-border work, any handling any type of that work. So since we have discussed the tax benefits that we have got during this budget 2026, apart from this, there are also provisions with regard to the updated returns. So being a professional, you need to know that there have been an important change in updated returns. So if in case you have, even after assessment, that is reassessment has been done, then also you can file your updated return. So earlier, what used to happen was once your reassessment is over, then there was limited room to voluntarily correct what all you have filed earlier. So now you can rectify your return by filing updated return so that it gives you more genuine chances of dispute resolution. That is one part. Apart from this, being a professional, ITR, we have to discuss here a revised time that is given for ITR. So for filing ITR 1 and ITR 2, there is no change in time limit. But yes, for non-audited, small non-audited businessmen, they have extended the time to 31st August. So earlier it was 31st July. Now they can file their return till 31st August. This is just to reduce the burden of the professionals because of hectic ITR filings. Then similarly, it has given the more time to individual so that they can correct their ITRs within the time prescribed. So apart from this, there have been also other major changes with regard to the globalization when you say. So since government was entering into more FTAs with different countries. If you see, government has been recently we have entered into FTA with EU, then we have entered into FTA with UK, then Middle East countries. So to promote that FCA, to implement that FTA policies, now government has made more open FDI policies so that liberalization investment can be done in India.
Okay, thank you so much for that, Ruchika. Now, even though when I started off the discussion, I did say that, budget did not really have many major announcements. But now that we're going through it, it does actually have a lot of things that we need to carefully take into consideration as employees, as HR professionals, as employers, right? So coming to you, Anurag, what kind of common misconceptions or mistakes that you think we can expect employees to make after this budget announcement, and how can HR teams, payroll teams proactively address them so that we can prevent it from happening.
So this year, because not much change has happened on the salaried side, I don't think there would be that misconceptions, flowing from the union budget. But I think as a consultant, as somebody who advises the clients, I always say that whenever these changes come, it's always good to make the employees aware that what are the changes in this year's budget which would be impacting them as an individual or as an a salaried person, because those changes this year's might be appearing minute, because I would say this year what they have done is a kind of a housekeeping kind of a budget. This is not a make or break budget. This is not something that the government says that they want to dole out much benefits, although they did it based on the the kind of geopolitical interplay that is happening, because we are seeing those rare earth related announcements and some manufacturing related announcements. But I think the focus was more on housekeeping. So as Ruchika may mentioned that the part regarding the extended timeline for revision. So that is something that organizations should always make their employees aware, but at the same time, they should also make them aware that for all practical purposes, the timeline for revision should be 31st December. If they want to extend that revision timeline beyond 31st December, then there's going to be an additional fee, which can be in the range of 1,000 to 5,000 rupees. The second important is regarding the updated written part of relying on the notice, because practically as a consultant, what we are seeing is normally why do people go in for updated return? Because once you file your return, it is something which is done and dusted away with. That is the normal conception of an individual. The only time when you start revisiting those positions is when you receive a notice, show cause notice under the reassessment. That is when the red flags start appearing. And that is why it might be too late a situation wherein you have already got a notice, the show cause, or sometimes I've seen that people even ignore the show cause notice and suddenly you are in the midst of a reassessment proceedings, in which case they realize that the past position that their accountant would have taken is not correct, and there might be a exposure on account of non-disclosures of the income and so on and so forth. So that is something that clearly they have bought it out this year. But at the same time, there's a factor which they have factored and told that even if you do that updated return, there will be additional tax at a rate of 10% also that you need to pay. So what they're saying is they're giving something, but at the same time, they are saying that don't get too much complacent in terms of the compliance, because if you do that, then there will be additional fee or penalty whatsoever that will be charged by the authorities. As far as regarding the TCS and all those parts is concerned, this is also something which is relevant because nowadays many individuals have started sending their children abroad for education purposes. Medical reasons could be there. There is overseas tour program packages also, which is people have started traveling abroad. So one thing that they need to factor is, of course, the TDS will be collected at source, but at the same time, whenever they're filing their return of income, because there is no corresponding income attached to that TCS collection. So this amount is basically more like a refund that they would need to claim. So when they are filing their return or getting it filed through some other, service provider, they need to make sure that those amount is been factored into, taken credit of, so that if there's any refund which is coming, that is also something that needs to be taken care of. So all in all, if I put it in summary, changes are not that much post union budget 2026, but there are certain housekeeping measures that as a employer of an establishment, they need to make it aware. So if we have HR professionals who are part of this forum, uh, a sort of like a small highlights is something that need to circulate it to their employees, telling them that these are the changes that you need to factor into when you are basically filing your return of income, and in terms of the compliances, in terms of your own internal housekeeping that you need to adhere to.
No, definitely. Thank you so much for that, Anurag. And I think always, because, somebody who's not from a compliance background, it might be very challenging to break it down. And this really does help. And I think, as you rightly mentioned, it's important that, HR teams or, the teams do prepare sort of a guide as an update for all the employees that they can circulate to, so that everybody is, keeping up with what's happening and what are the compliance updates that we need to be aware of to avoid any kind of penalties in the future. So thank you so much for that. Now, I think I'm pretty much done with my questions. I just have one last question, to sum up this conversation today. But before I do that, I'm just going to announce for the audience now. Now is your time to ask your questions. So any questions that you have, you can start putting that in the Q&A panel, and we will be taking them one by one. So one last question to both of you, Ruchika and Anurag, and maybe Ruchika, you can, first start off with, which is from your perspective. We did discuss about the kind of changes that have been brought up in this budget session and how we need to be compliant with it. But in your opinion, what should organizations immediately start preparing for, to stay compliant in the next 3 to 6 months?
So, Raki, we were just discussing what compliances need to be taken care with regard to budget 2026. And obviously, HR has to take care of those compliances. So I just want to add one thing in that. In December 2025, lot of employees, they have received notice from Income Tax Department regarding disclosure of foreign assets and liability. So what happened was, specifically when I talk about the employees who are working for MNCs, so they were getting ESOPs from the company. They were having demat account anywhere around the globe, but not in India. And employees were not at all aware of this, that they are having demat account outside India. And just because of that, they have got income tax notices. So to deal with such notices, government has come up. They have opened a 6 months window for the employees. In fact, for all the taxpayers. First thing, if you have income, foreign income and foreign assets below 20 lakhs, then they have come up with provision of non-disclosure, one thing, and they have given the immunity from the prosecution in this case. Second thing, they have categorized the employees into two categories. That is, one category, if you have not at all disclosed any of your foreign assets and income, then in that case, you can simply pay 60% as a tax and you can comply with the provisions. If in case you have disclosed but not properly disclosed, then in that case, after paying a fees of rupees 1 lakh, if in case your assets value exceed 5 crores, you can get the immunity against the penalty and prosecution. So this is one thing I think this HR has to take into consideration. They have to take, you can say, sessions for the employees, tell them that they have demat account outside India and how they have to give the disclosure of this foreign assets and income in their ITR. One thing. Second thing is, since we are talking about HR, so tedious compliances in case of manpower supply has been changed. So that need to be taken care so that there is a smooth HR finance vendor coordination is there, which ultimately will reduce the risk of notice and penalties. Apart from this, the timelines of ITR that need to be taken care by HR. HR has to spend time. They have to tell their employees that what are the time for filing ITRs, what are the extended time, by what time they can revise, and how much extra they have to pay for the revision of ITRs. And apart from this time the government has come up with a workforce expansion beyond metros, that is MSMEs, champion enterprises. So government is promoting tier 2 and tier 3 cities to expand, to have payroll compliances from there. So in this case, particularly, HR need to take care about the state compliance, that is PT, Shop and Establishment Act, multiple location payroll, that need to be taken care by HR.
Okay, thank you so much for that, Ruchika. To you, Anurag, if you would like to add on to this, and what do you think should
Yeah,
be the
absolutely,
guide?
absolutely. Because this is, and I agree with what Richuka ma'am has just mentioned, that this is something that companies should make their employees aware, because there are many live cases that I'm personally handling, wherein people have received notices from the foreign investigation wing, and we have to understand how this information is also coming into picture. Because I always used to get a query from my HNI clients, wherein they used to ask that how come the government is aware about this. See, government has entered into the double taxation avoidance agreement with many countries. Okay. And what happens under these DTAAs is there is a information exchange agreement clause as well, under which both the countries exchange information. And the banking related information, depository related information is now being transparently exchanged between both the countries. So let's suppose I'll give you an example, like India has got DTAA with the UK. UK will share information that these are the people who have come to UK from India. They're holding so and so forth bank account. Of course, keeping in view the data privacy and all those things in picture. So the information is then exchanged with the tax department, and that's why the foreign investigation wing has those details. And those details can be as minute as which account you are holding, what is the depository you are holding, even the kind of dividend income that you have earned because of holding those foreign securities. Now, as an individual, what we need to do is be aware, because what will happen is whenever we are any person is exercising any stock options. So typically we are talking about, let's suppose I'll give you a very plain example. We have Microsoft, we have a subsidiary of Microsoft in India. So when an employee is working in Microsoft, they might be granted a ESOP by the Microsoft headquartered company. So those will be the shares of the Microsoft headquarters, not of the Indian subsidiary, because it's not a listed entity. So I would be personally holding a security, Microsoft security, in my foreign depository account. And then once I exercise those options, then there will be a perquisite taxation, which my Indian subsidiary will be doing and issuing me a Form 16 as well as Form 12BA, which will contain details of those perquisite calculation. That is where the payroll piece would come into picture. Now, after that, what happens is I am, as a resident and ordinary resident in India, is required to mandatorily report all these foreign assets, which is my foreign depository account, as well as the kind of securities that I'm holding abroad. Many people, inadvertently or out of ignorance, have failed to report these things. They think, okay, fine, my TDS has been deducted, so no further compliance is needed from. But the problem here is because the person has not reported that foreign assets as well as depository thing, this is something that can trigger questioning from the foreign investigation department, wherein they say, we know that you have a foreign asset which is in the form of a depository or bank account. Why have you not reported it? Now, one interesting change that has come this year is they have provided a limit, or I would say a relaxation. It was there earlier in a different provision of the section, wherein they say if you are holding any foreign assets, except for the movable property, wherein the value is up to 20 lakhs, then even if inadvertently you're not able to report, then also there will not be any penalty. But 20 lakhs might appear a big amount, but if you convert it into dollars as well as GBPs, it might be a small or a nominal amount. So these are the facets that one should be aware of, because under the black money legislation, if you trigger the penalty, then the penalty is around INR 10 lakhs rupees per year basis. So, and there's no leeway around it, and that's why the government has also bought that foreign disclosure scheme. So my humble request to everyone here present in this forum is, just make sure if you have your colleagues or employees who haven't yet reported, this is a good 6 monthly window that is being provided by the government of India. Utilize it, make those necessary disclosures, so that tomorrow down the line, if you're not able to report, then there will be harsher penalties.
Thank you so much for that, Anurag. This really helps, and I think examples always helps. Even
Hmm.
though it's right in front of our eyes that we need to do this, until we are shown what will happen if you don't do it, we don't get it right, right? So thank you so much for that to both you and Ruchika. And wonderful conversation as always. Lots to learn, and I think there was lots to discover and uncover, right? I would again like to reiterate that I started off with saying not many changes, but now that I have heard both of you speak about the changes, I would like to take that back and say no. Definitely a lot of changes that we need to, be aware of and stay compliant with, in order to be, right citizens of India, if I may so. So thank you so much for that. That's all from my side, and thank you so much once again for all those insights that you helped us with. Now I'm immediately jumping on to the audience questions. I can already see some 9 questions have come in. And we'll go through this one by one. And in the meantime, for all the rest of the audience, if you have any questions, you can start putting them now. We might skip 1 or 2 questions depending if it's repetitive or if it needs to be taken, offline. We'll let you know. But stay tuned towards the end of this session, because I do have another update to share with you all that might be very helpful. So let's get started with the audience questions. The first question came from Sanjay Tyagi. The question is, can I avail rebate under Section 87A if my taxable income excluding STCG is below 12 lakh?
Hmm. Interesting question, because again, many people would be having a misconception as to whether STG needs to be included or not. 87A is basically applicable for a normal income. So wherever, so in this example, if my 12 lakhs is excluding STG, that 12 lakhs will be treated as exempt under this rebate under 87A. But whatever short-term capital gain I'm earning, that will still be taxable.
Understood. Thank you so much for that, Anurag. I will move on to the next question. This is the same question. This is from again Sanjay. The question is, I have NPS account and made some deposits in tier 2 account. During the current financial year 25-26, I switch the fund manager and later withdraw some amount. Now, how the capital gain will be calculated since number of units have changed on switching the fund manager? So, Ruchika, would you like to take this one up?
So you need how much units have been changed. So based on that, I can calculate this capital gain and let you know.
Okay. Sure. So, since this requires some detailing, Sanjay, you can write to us and we will,
Because
connect you with the
I
speakers.
would say
Yes.
one thing is clear, just by switching the fund manager, there won't be any capital gain. But because this concerned person is saying that he has withdrawn that amount, and because the NPS is calculated based on the NAV, So we'll have to see at the time of switching, what was the NAV, at the time of acquisition, what was the NAV, and at the time of withdrawal, what is the NAV. So based on this, then the actual details would be worked out, as well as what was the period of holding in each of the cases. That is something there. I think one thing is very much clear, that government has not yet very much clarified on how the NPS, taxability would work as far as regarding this withdrawal of the tier 2 is concerned. But I think based on the experience and based on the workings we do for mutual funds, I think a similar analogy can be taken for NPS accounts as well.
Understood. Understood. Thank you for that, Anurag.
No,
Now,
but he
as
has not disclosed the number of units that has been changed. So he need
Yeah,
to disclose this.
okay,
yeah.
understood. Now, before I move on to the next question, I do see some of the participants raising their hands. So, as I said, if you have a question or a feedback, you can just type it and we will, take it up one by one as we are doing it right now. Okay, so the next question is, what should be the CTC bifurcation under the new labor code, including the basic salary and other allowances?
That's I would say this is now becoming $1 billion question. And so I would
I
say,
think Anurag, even you will agree with me. There is no still government is also unclear about this.
absolutely, absolutely.
How
I
much
mean,
how much basic pay should be, like whether it should be 50% of CTC or it should be 50% of gross pay. That is
Ruchika, so
still unclear.
this is, and I would say media is also has to take some blame, because we are seeing those articles wherein they are blatantly saying that you keep the basic at 50%, and then yes, you are basically complying with the wages definition. The problem here is they are overseeing a component which is hidden somewhere, which is what we call as balancing figure and termed as special allowance. So what will be the, the treatment of that special allowance is something that many companies are not aware. So I would say this CTC bifurcation for the purpose of the labor codes is a is a topic that requires a separate session of its own, and I'm sure Raki, you would have in the past organized it. But my takeaway on this is government has to bring some clarity on this. They have recently released some FAQs in which they have mentioned that variable bonus, ESOPs, your reimbursement related payment is something which will not form part of wages. But then, in the exclusion criteria, if we talk about in the inclusion criteria, in the conditional inclusion, that is something that requires a detailed working. So the person has not mentioned their name, but I would suggest, if you are a person who is a part of the HR team and are looking at that kind of a structuring, I would say this requires a detailed and an in-depth study, and I would recommend you to engage a consultant for this, because it's a very technical definition of wages which has been prescribed under labor codes. And based on that technical definition, as well as the kind of components that you are paying within an organization, a classification has to be done for each of these components, whether they are included, excluded, or conditionally, whether they are benefits in kind or not. So those classification has to be done, and it's a very technical job at present. I am personally working on a lot of clients on this issue. So I would say that this is not a straight jacket answer. Rather, this is something that requires an in-depth study, because each organization would be having their own separate compensation structure, as well as the benefits that they would be providing to their employees. So it will depend. My answer would change based on the facts and the situation in the case.
Understood. Okay, thank you so much for this, Anurag. Um, cool. I'll move on to the next question, which is, are employees whose salary is above 25 LPA, they have filed income tax return in the last year for approximately 1 lakh amount, but they have not received the return yet. Could
Refund,
you
This
I
will
confirm?
be
think refund,
refund,
I
not
think, yeah.
return.
Yeah. So could you confirm the reason for
I
delay?
think, Ruchika, I think you would also agree this year the refund mechanism is a bit delayed, because
A
I
bit delayed,
remember I
yes.
remember last year we were filing a return and there was a refund of, I think, 1.5 lakh something. And one of my clients called me in the morning and said, "Is it a joke?" I said, "What's the reason?" So, "Well, I have just received the money into my bank account."
Same thing happened with us. We filed the return in the morning, and by the evening, the client got the refund. So
Yeah.
this year, yes, it is delayed. In fact, I was expecting that government will come up with some timelines regarding refund, which
Hmm.
everybody expects from the government.
Hmm.
but they haven't come up with a timeline. So sorry to say, there's nothing in our hands. Everything is online. So you have to check whether at what stage your return is, whether it hasn't processed or is still
Yes.
processed. You need to check that.
Yeah,
Understood.
but normally under the act, the timelines is, I think, for the last year returns, the timelines would be December 2026. The government has that time window within which they will be processing the refund. And in case there is any delay from the government side, the person would be receiving the interest. I think it is at a rate
Interest.
of 6% per annum. So that interest they will be earning. But rest assured, they will be receiving the refund unless until there is some objection from the department or there is some anomaly that they would have detected in the return. Then in such a case, the refund will be put on hold.
Understood. Thank you, Anurag. Thank you, Ruchika. Moving on to the next question. This is simply asking for the recording. Yes, the recording of the session will be shared with you all. So be rest assured you will have that. Another question, I think we did discuss on this in very detail, but if either of you would like to add on to this, the question is from Anubhuti. Kindly share some insights about how this new budget is for HR professionals, or the kind of steps that they need to take care.
So I think sanitization need to be taken care of. One thing. Second thing is with regard to foreign assets and income that we have just discussed, because earlier nobody was bothered, even they were not aware of, employees were not aware of that they are supposed to give this disclosure. So now
Hmm.
this is something very, you can say mandatory, that need to be taken care. And
Understood.
apart from this, TCS compliances need to be done. And last but not least, since there is a time gap for filing of revised return, earlier it was 31st December, now it is 31st March, along
Hmm.
with some additional penalties. So that need to be taken care.
I think one
Understood.
interesting factor that we haven't highlighted, Raki, is around there has been some exemption that they would provide to a person who qualifies as non-resident. There's some government notified scheme that is supposed to come out, which will provide a, for foreign sourced income, the exemption will be there for a period of 5 years, provided that person who has come visiting India qualified as a non-resident in the past five tax years. So that is something that requires further notification from the government side, but it would be interesting to see which government notified schemes would we cover. I am assuming that wherever those government projects, the government of India enters into certain projects with the foreign companies as well as inviting those technical person, I think those will be allowed some kind of exemption on the foreign source income. So this is something that was also covered in this year's budget.
Understood. Thank you, Anurag. Thank you, Ruchika. Moving on to the next question, which is from Manjunath S. Can we get like a list of change in section numbers, especially the sections impacting individual payroll processes, when compared to IT Act 1961 versus IT Act 2025? For example, section 11.5 BAC was the new regime section reference in IT Act 1961, section 202 in IT Act 2025.
Well, Income Tax Act will be implementing from 1st April 2026, and there has been a hell of changes in the act. So many sections have been removed, around 200 sections have been removed. So, yes, we can prepare a list, we can share it, but yes, it will be time-taking process.
No, I
So
would rather say just go through the income tax website of Government of India. Therein you will find those cross references. I think they have built a tool for the new Income Tax Act. So just as a quick reference, and if you are so much wanting to be aware, I think publications like Taxman also publishes their book wherein they have cross referenced the old section as well as new section. So that would be a good referencer for anybody who would like to see what are the changes which has been done.
Understood. Okay. Thank you for that. Next question is from Manthan Bhatt. Will the old regime be there in financial year 26-27 with the sections and proof of investments?
Yeah,
yes, it,
yeah,
it
it
is
is
there.
there.
There is no change in old tax regime. In fact, last year also there was no change
There
in
is no
old
change.
tax regime.
Hmm.
Government is not making any changes in old tax regime because they want to implement new tax regime. They
Yeah.
are more inclined towards new tax regime. So
So every
old
year they
tax,
are making it more sweeter every year. This year was one gap year, you can say. We might see something in the coming year, But as of now, the old regime is there. So people whomsoever they are opting, one thing that need to remember as employees and as somebody who would be handling the payroll part is new regime is the default regime. And so as HR professionals, as somebody who handles the payroll, one thing you need to make sure it that that option between the new regime and old regime is something that is being exercised by the employees at the start of the year. And that's why we always suggest, like, great HR is such a good tool wherein you can log into the portal, do some kind of number crunching and see which regime will be beneficial for you, and then do that option whether you would like to stick with the default simplified regime or move towards the old regime. So that is something that at the beginning of the fiscal year, employees should remember doing.
Sure.
And
Thank you for that.
regarding of investments, it is same. All disclosures are same as they were in last year. In fact, last year only they have made the changes in ITR. So all the disclosures are same.
Yeah,
Understood.
but one thing that now employees has to be very, very, wary about is in terms of the disclosures. Because when you are submitting the proof of investments, earlier people used to say that I've taken an accommodation, HRA accommodation, and then they used to submit those, fraudulent proofs. Now, this is something that is being keenly watched by the income tax department. If you are submitting a proof and they saying that you are paying a rental to so and so person along with the PAN number, you have to be sure that it's a genuine transaction, because with the kind of cross referencing that is being done by the authorities, we are practically seeing many notices that the individuals have started receiving from the income tax authorities, wherein they have asked for the relevant details of the HRA exemption. Secondly, if you started contributing or in the past as well as thinking of contributing towards some charitable organization or a political party, again, these are red flag areas now. As soon as you make those payments, declare it in your return filing or in the Form 16s, then in such a case, we have seen queries being raised by the income tax department, trying to understand what is the genuineness of the entire transaction. So this is something that now individuals have to be aware, because traditionally we have seen in the past that people used to say, oh, we will just file it, we will claim mediclaim and so on and so forth, and the government will never ask us. But those days are now long gone. I think government are actively looking at such claim of deductions and are cross-referencing and cross-verifying the same.
Understood. So we need to be, less notorious and more genuine now, because
Absolutely.
otherwise penalties will definitely pull you
Always
through.
better to be on the right side of the law, because I personally seen many cases wherein individuals are coming that we filed the return and now we are seeing this notice. You can't do anything about it. There's no excuses that you can give to the authorities, because ignorance of law is not an excuse before the
Right.
income tax authority. You can't say I was ignorant and that's why I did this. They will not entertain such kind of a request, and there will be harsher penalties on account of such incorrect disclosures.
Understood. Next question is from Deepthi. Are there any tax imposed on the losses incurred on F&O trading?
STT has been increased, so government want to discourage investment in futures, so they have increased the STT from 0.02% to 0.05%. I think that
Absolutely. Right. And I would say this is kind of a Jain Street tax that has been imposed by the authorities, because I think the intention is to discourage people from entering into future and options, more so on the futures rather than options, because futures is something very risky, and I think they want this to be something that needs to be exercised by a knowledgeable professional, rather than the trend that we are seeing, that even salaried class are also entering into this FNO stream. So the whole intention is to discourage individuals from entering into such kind of transactions.
Understood. Thank you, Anurag. Thank you, Ruchika. The next question is from an anonymous attendee. Can I submit 50K invested in NPS as investment proof under new tax regime?
No. Under the new tax regime, the employer contribution towards NPS is something which is allowable as a deduction, employer contribution. But 50,000 deduction is no longer, because that comes under the Chapter 6A, and most of the deductions are gone in the new tax regime.
last
Understood.
year government has increased from 12% to 14% employer
Yeah,
contribution on basic pay.
absolutely. Yeah.
Understood. Thank you, Ruchika. Thank you, Anurag. The next question is, I want to know that if company provides anything other than compensation, for example, if company is in profit and is providing bonus to all employees, is it taxable for employees whose salary is between 50 to 40 LPA?
Bonus is taxable, yes. And in
Yes.
fact, as in when the company is giving this bonus, TDS will be deducted simultaneously.
Yeah, it will not
So
be, ideally, it should not be spread out. It should be fully taxable during that relevant month only.
Understood. Thank you. The next question is from Vijay Lakshmi. Is it obligation of employer to ask the employees to disclose their foreign income, or is just keep them informed about it? Or is it compulsory to take those income in payroll calculation?
it is better if in case you disclose it, because anyhow you have to disclose in your ITR, and anyhow you have to pay the taxes if you have foreign income. So if in case you are disclosing it to your employer, so obviously while calculating your tax, employer will also consider your foreign income also while calculating that tax. So TDS will be deducted accordingly.
Understood.
Yeah, I mean, again, the thought is yes, if you as an employee, because employers will not be asking, rather it is the onus of you as an individual, as a salaried guy, to provide that. Again, it's a kind of a, flexi kind of a thing. It's a kind of option that a employee has, wherein if they are earning any foreign source income, they provide those details to employee or organization, and they will deduct TDS on that. The question will come, what about foreign taxes? If there are any foreign taxes, then whether the employer organization can take a credit of those foreign taxes or not. And that is one area which is, I would say, kind of a debatable, because if you look at the double taxation avoidance agreement, it says that when a person is qualifying as an resident in India, earning any foreign source income on which taxes has been deducted, then the foreign tax credit is something that will be allowed. Now, how the employer establishment will be factoring those foreign credit of those taxes, something that is requires a deeper level of analysis. Practically, we have done it for expatriate employees. We have done such kind of a mechanism. For domestic employees, not yet, but this is also something which is practically feasible.
Understood. Thank you. The next question is in financial year 25-26, TDS has been paid by individual under section 19(2)(b) for 6 months, and for remaining 6 months, TDS has been paid under section 19(4)(j). What is the impact on ITR filing?
Which question are you saying?
This is from an anonymous attendee asked at 4:50 p.m.
450. Okay, this one is the latest one. A TDS has been paid to the individual under section 192B for 6 months, and for remaining months has been paid. What is the impact on ITR filing? Yes, the impact is there because 192B is basically income under the salary only. 194J is professional income. So now the question comes, has there been any change in the status of the individual? Earlier, he was a salaried person, and then later on, he became a professional services provider, kind of a consultant. Then the impact on the ITR filing would be he will have to go in for either ITR. He will then have to go in for ITR 3, I think, instead of
ITR
the
3.
ITR 2.
Yes.
Then he will have to go in for ITR 3 for filing of and declaring his personal business income. He will also have to take a position whether, if he is earning that income in professional capacity, whether presumptive taxation is something that can be taken by him under section 44 AD of that. So these are some of the things that one needs to keep in mind.
Sure. Thank you. The next question is from Kishore Kumar. Instead of releasing the IT declaration to employees, can we process all employees as new regime, and employees can
No,
change in IT returns time as old regime?
no, not a recommended practice, because I think if you're trying to ease your payroll, processing by putting everybody under the same bracket, that will be counterintuitive. I would say stick with the old approach, wherein you say you give them an option. Start with the default regime. In case they don't exercise that option, then it will be always a simplified regime. Otherwise, if they exercise that option, then you go in for the old regime. And that is where, Raki, what we are seeing here is that the payroll module is something that is gaining a lot of prominence, because if you are maintaining your payroll via spreadsheets, that is not a workable solution. Even if you are having 10 to 15 or 20 employees, I would strongly advocate organizations who are maintaining it in Excel sheet to stop doing it. And now we have so many platforms. In fact, greytHR has a great platform wherein these things can be worked out very, very smoothly and very easily without any hassle on the payroll processor.
Understood. Thank you so much for that, Anurag. The next question is from Menika K. Convenience reimbursement and mobile internet reimbursement. Is there a limit for claiming exemption, and is this allowed under new regime?
See, conveyance reimbursement, I would say, can be in the form of fuel. It can be in the form of a driver. If it is a conveyance allowance, then there is no exemption. But if it's a fuel reimbursement and driver related reimbursement, then exemption is allowed and to a certain limit. I think it also depends on the cubic capacity of the car. So I think the limit is around 1800 will be allowed as a per month exemption, or 2400. And for driver, it is 900 per month. As far as regarding mobile internet reimbursement is concerned, there is no hard limits prescribed. But again, just because the limits are not there, you cannot be unreasonable. Because right now we are also seeing that the mobile internet bill hardly comes at 1000 rupees, 2000 rupees. So if companies are saying that you provide a bill of, or we will allow you a claim of 10,000 rupees, it might not work out in practical sense. So we always say that keep it at a reasonable level whenever you're structuring your compensation. Keep it at a level of 3000 to 4000. That is considered reasonable. Otherwise, this will also encourage the employees to also falsify the bills, submit the false records. So that's why we keep it at a, or recommend to keep it at a nominal or a reasonable level.
Understood. Ruchika, would you like to add anything to this?
This is not specific, but yes, if it is in the form of reimbursement, then it is not taxable. But yes, there is a limit with regard to the conveyance, with regard to the CC limit that your conveyance have. So based on that, it is taxable.
Understood. Thank you. The next question. So we have already come. We have already past 5 o'clock. I'm just gonna take a few more questions, like maybe
Yeah,
a couple of questions, and then we can wrap up. For everybody else, if you still have more questions, you can write to us. We'll be sharing the email IDs of both our experts with you today, and you can reach out to them to have your questions answered. I'll just take a couple last questions, and then we can wrap up. So this question is from Hanif Sheikh. Deductions under Section 80G, which were previously allowed, have been suddenly disallowed. What is the reason?
So it is not that they have been disallowed, but under old tax regime, you can claim the
mm,
deduction of 80G, but under
yeah,
new tax regime, it is not allowed. So
mm,
that is standing from day one only, as in when the new tax regime was introduced. From day one, when new tax regime was introduced, there was no benefit of claiming deduction
mm,
under Section 80. But yes, I want to say here, if in case you are claiming the deduction of 80G, then you need to have actual proof of making this payment.
absolutely.
To whomsoever you are making this payment, they should be
Mm.
eligible of giving you the benefit of 80G.
In
Understood.
fact, onus has been put on these charitable organizations also to do the necessary reporting. So whenever they
Yes.
receive a donation, they are required to do that reporting. Strangely, not the political organization, but ATG organizations have to do that necessary reporting.
Understood. Thank you so much for this. Moving on to the next question, which is from Raksha Shetty. If a company is providing free food to employees and giving Sodexo cards for purchase of grocery, can this be claimed as food allowance?
So Sodexo vouchers is something that is allowed under the old regime to the extent of 50 rupees per meal. Uh, and that is there. Uh, but under
That is
the
also during the office hours. If you
that
are
too
claiming
during
that
the office
deduction during
hours.
the office
So typically
hours.
we have seen companies say that the meal has not been defined. So meal covers your breakfast and lunch. So companies normally provide a limit of 100 rupees per day, amounting to, I would say, around 2000, 2500 rupees as a Sodexo allowance or benefits. So yeah, that much amount is allowable. So I would say it works out to around 24,000 rupees on an annual basis, which is can be claimed as an exemption under the old regime, but under the new regime, this option is not there. So it will be treated as taxable.
Understood. Thank you. So I'll just take one last question. This is from Bhushan SS. if I have not enrolled in the NPS employer contribution at the time of joining, will I be able to opt for it in the next year, or is enrollment only allowed during the joining process?
No, you can because it is all part of your flexi basket. So if in the first year of you joining you have not opted for it, in the subsequent year you can always opt for it.
It can be opted anytime. Yes.
Yeah.
Understood. Thank you so much, to you both, Ruchika and Anurag. Wonderful conversation today. Thank you so much, everybody, once again for joining us. And we're looking forward to hosting you very soon once again. And for any questions, you can reach out to me on my email ID, and the recording will be with you, with all of you very soon. Thank you so much once again for joining us. Looking forward to another exciting session with you very soon.